Motilal Oswal, meanwhile, has joined us to talk about the market. Morning, Raamdeo. It's been a good rally, 40% from the lows. Do you see more legs to it, or would you start getting cautious before election results?
I think this rally has been quite extended and very surprising in terms of its strength and longevity. But my sense is that one big event which market is clearly seeing is the installation of new government, and around that time we should see whether the market picks out at 11,000, 12,000, 30,000. So one round of rally will probably be over. But a lot depends on behavior of foreign institutional investors nowadays. So you also have to have an eye on what's happening globally in terms of broader trend.
Raamdeo, morning. What have you made of earnings so far, and is there any clear visibility on how to mark earnings for FY10?
I just missed the question. Can you just...
What have you made of earnings so far, Raamdeo, and any clear visibility on how to mark or map FY10?
Yeah, I think earnings in the current quarter is pretty good so far. All the banks, cement companies, telecom companies, even auto companies. I think broadly we had earnings on the expected lines with some actually positive surprises, particularly in the consumer companies. I think bulk of the metals and those bad results they have, and real estate companies, obviously they have not come out with the earnings report, and they are likely to disappoint the markets. So, but I think the earnings season this year is going on clearly on the expected lines. As per the estimates of our analysts, we have stopped downgrading the earnings for next year, and next year is likely to be more or less in line with 2009 earnings, and not much of growth is expected because we had the very roaring first half in 2008-9. So 9-10 is likely to be more like 8-9 in aggregates. But there is no further downgrades from current 880-900 kind of range for 2010.
How are you mapping valuations now, Raamdeo, after the rally? At 11,500 Sensex roughly, does the market still look underpriced, fairly valued, or do valuations look extended in some cases?
I don't think valuations are extended at all. My sense is that at about 8,000 or so, markets were clearly very, very pessimistic, and that was an opportunity to buy and invest without looking anything at all. But even now, I don't think the valuations are anything to be worried about if one is truly an investor and long-term investor. I mean, 3-4 years profile. But if one wants to time it for 6 months to 8 months kind of thing, then these rallies of 3,000-4,000 points will make a lot of difference. But longer term, I think at 10, 11, 12 P multiples for the market, broader market, and more like 8 to 10 times, 12 times for individual companies. My sense is that these are times to simply build your portfolio with blue chips.
Just to focus on some specific earnings, Raamdeo, you track two-wheelers, but what did you make of Maruti's numbers?
I think Maruti is becoming much more global company. I mean, I think till about last year it was only India-centric as far as the sell side is concerned. Imports always had some component of Japanese or foreign imports in terms of the component. So forex losses or gains were much smaller part of the game. But now, as their export component in their earnings increase, I think the management of forex will become a lot more important. Secondly, their margins will also be impacted by what's happening around in the global car markets. I mean, if there is a glut in the world, 50% production cuts for Toyotas, I mean, those things will also start impacting Maruti's outlook, and they will also be equally benefited whenever the global boom in cars come in, because they are probably one of the best small car manufacturers in the world. So I think Maruti's profile is changing very rapidly. It remains a very promising company, and it has rallied quite a bit, but the extent of loss in Q4 was quite alarming.
How would you position yourself, Raamdeo, in the two big pharma names after looking at the results, Ranbaxy and Cipla?
Ranbaxy I still don't understand because the extent of losses, the US FDA and the new management, what's going with their strategy. So I think it will take some time. Of course, the valuations are beaten down absolutely, and so what we need to understand is what's going to be how exactly the new management wants to make money, where their focus would be, and what are the new opportunities in that. So I think Ranbaxy, we are trying to understand that. So I don't have any comments at this juncture. But Cipla clearly has been a very consistent performer, and again it is in the limelight in terms of the current opportunities. I think at 23-24 times next year, Cipla is not amongst the cheapest stock, but it's a very consistently highly profitable, well-managed company. So 23-24 P multiple, you'll get whatever earnings growth comes, 20-25%. That would be the potential for the company to make money.
Stripped of elections and global cues, Raamdeo, from what you've seen in earnings, what kind of range do you think the market can support or hold for the rest of this calendar year even?
It's very tough because this global macros, I think we have had enough of it in last 6-8 months, 1 year. I think this is a time to seriously invest, because at 9, 10, 11 times P multiple, I don't think one should bother about too much about what's happening globally. I think we are doing reasonably well, very stable. We are talking about anywhere between 4 to 6%, 7% kind of growth, and earnings are very, very attractive, stable. So I would not, of course you can't stop listening to all these things, but I think this is seriously time to get on to the fundamental, get on to understanding the companies and finding whatever we understand, and find good businesses and start logging in rather than trying to figure out where the world is headed, because it's literally impossible to figure out whether the global markets will be 50% higher or 20% lower from here.
What about cement? We've seen some good numbers. Stocks have rallied in that sector, Raamdeo. Given current valuations, how do you feel about that sector?
I think it has been surprising to everybody that demand robustness which is there right now. And of course the companies are also saying till June, July, I don't think there is any problem in terms of demand. But it keeps surprising. I think you buy when there is a seller's market and valuations of the stock is well below the what you would expect from let's say a replacement price or something like that. So I would still remain invested. In fact, I had bought cement stocks earlier, and my sense is that maybe what analysts are for last 3-4 years they're saying that glut is going to emerge in second half of this year. So it may we may have for some time kind of a glut kind of situation or some softer prices. But I think if you buy it significantly below the replacement price, in the long run, I think it is going to work out fine with us.
Thanks, Raamdeo. Always good speaking with you. Thanks for joining in this morning with your thoughts. That's Motilal Oswal with their view on the markets. Just